Andy Fenton.
Brother, happy Wednesday. Wine
Happy Wednesday
and
to you.
some kind of indescript. Maybe it's
Oh,
off
my
wine.
Lord. That does look hideous. Maybe you should have put a small amount of red food coloring in there and no one would have known.
That's a great tip there.
That's a good tip. Wealth and wisdom today. I've got a little bit of wine and Andy's got some hideous green looking stuff that he's on a bit of a cleanse, ladies and gentlemen. So today, you never know. He might be energetic or he might be apathetic or all the ranges in between. So, mate, great to catch up with you again for another Wealth, Wine and Wisdom or Green Weird Stuff for you for 1 or 2 weeks, for the next couple of weeks. But we've got a few people jumping on now as we roll. So, gang, give us a shout out if you're on, where you're from, who's dialing in. Be great to hear from you. There's Chris. He's jumped on there. Thanks, Chris. Good to see you, mate. As we get things rolling, Andy, I might just do the quick intros. If anyone's joining us for the first time, welcome. If anyone's coming back for another go at listening to what we've got to say, then welcome back. Appreciate your return. Andy Fenton, 20 years in the world of finance, banking, and financial planning. Jason Witten, 20 plus years in the world of property investing and coaching property investors and running multiple businesses. Same with Andy, runs a business, has done in multiple places. We get a chance to share some of our wisdom. Andy's catch cry is often more wine than wisdom, but we try and keep the wisdom flowing more than the wine on these days. It started out for us on a Friday, sharing when COVID hit. We wanted to support our communities financially. Some of the times things are a bit confusing in the world, and we hope to shed a bit of light on that from our experiences and point of view in our industries. So welcome along, gang. Appreciate you popping along and having a bit of fun with us. So just so everybody knows, we do the show in kind of 3 segments these days. We've kind of given it a little bit of structure. We do a segment called What's in the News. Andy and I will talk about some of the things that are topical this week and last week, showing up in the news and giving our opinions, pontifications on what that might be. Then we thought we might take a chance to teach a few little things. We're both educators at heart. We love the understanding of knowledge, and applied knowledge becomes power and confidence, certainly in our worlds. So we take a chance to teach 1 or 2 things. And then last but not least, as we go, if you're sitting there today, and if you have any questions about the world of business, financial planning and banking, about the world of property markets, and those sorts of things, then start thinking about what that might be, because we'd love to hear some questions from you guys about what's on your mind, anything that you need to have a chat about. So gang, welcome along. Andy, anything else that I missed?
No, I reckon you did a pretty good job there, getting pretty decent at it, mate. We've condensed what used to take us about 35 minutes down into less than 5. But I just realised that it may almost be the Wine and Wisdom, or the Wealth, Wine and Wisdom's first birthday. That's got to be coming up pretty soon.
We should have organised some virtual cake or something like that. So yeah. Well, when did it start? It was around this time, wasn't it? When did sort of COVID hit? So yeah.
Well, maybe that's the first question. Does anybody remember the first episode of Wealth, Wine and Wisdom and what day it was? I remember it. It was in the middle of a fair bit of chaos that was going on, and the world has come along leaps and bounds since then. We're in a very, very different landscape. At least in Australia, we are.
Yes.
And a lot has been happening. But mate, I reckon we jump straight into what's in the news if you'd like to.
Let's do it, mate. What's in the news? You've got some pretty interesting stuff to share with everyone today. So Andy Fenton, let's give it a drum roll. What's in the news? What have we got today, Andy Fenton?
Well, mate, something, and this is actually from last week, and apologies to all that we couldn't make it on last week, but what is now 0.5% of the global wealth wallet. What is now 0.5% of the global wealth wallet? What I mean by that is something has just passed. I won't tell you the number yet, but has just soared through 0.5 of the total amount of funds invested globally.
Wow.
Which is a pretty incredible feat.
While everyone's pontificating that, so what asset, is that right? What asset or something like that? Yep. Had 0.5 of the global investment wallet received the investment in, but we've got a few people dialing in. We've got Ann Cairns. Great to have you, Ann. Awesome. Craig. Craig or Craig? You never know with that thing. But Craig, good to have you on, brother. Fantastic to see you. What shifts have you guys noticed in the economy? That's a good one. We'll save that for a bit later, Craig. Good question. Thanks, mate. Chucking that one out there. As always, Alison, great to see you. Fantastic. As always, Nat's here. There you go. And Craig reckons there was leather couches involved when we first kicked off, Andy.
Mate, I think that there might have been yours and my face on a Chesterfield somewhere at some point in time. It feels like a lifetime ago in some respects. But well done, Craig. I do remember the leather couches as well. We haven't come far at all, really, given how long we've been doing it. But it's good to see you all. Put it in the question box or in the comments field if you know what is, as an asset class, is shooting past 0.5% of the total investor wallet in the world. So a pretty significant milestone. But before we go into that and before I answer it, some of the things that have been topical in the news recently that is kind of in my world and something which is now becoming more and more prevalent, and we're starting to watch it for a lot of reasons. And so there's these things out in the world, and they're called NFTs. Any idea what an NFT is, Jace?
An NFT. I've heard the term. I don't know. I can't remember. Yeah.
No. It's so it stands for non-fungible tokens. And these are hitting the news from the perspective of more so of people trying to protect their intellectual property, or there's been a lot of artwork that's been traded. No friggin' time, says Craig. I love it. Mate, that's pretty much on there. No friggin' time. No, it is non-fungible token. So these things are effectively digitally verified sources where you can lodge your artwork online, and it's kind of like a digital trademark in some versions. Like you could have a baseball card, a digital asset, a digital baseball card, if you will, and a non-fungible token is sort of its registration on a global marketplace, which is a really interesting concept, because I linked it in here, and I'm going to join a few threads together. But it was billionaire Mike Novogratz who just recently said, and I quote, NFTs are fundamentally going to change the way that we secure intellectual property forever. NFTs are now stored on the blockchain, and that's a big call. So NFTs are stored on the blockchain. And for those of you who don't know what the blockchain is actually the founding technology that sits behind all of these wonderful currencies that we're hearing about, like Ethereum and Bitcoin, so on and so forth. But blockchain to me is almost like a registration platform that is verified from various different sources around the world. And this technology is growing. And the fact that now art is being sort of trademark stamped, if you will, by it, and that people are registering digital assets now, because digital assets are one of the new things. And Jace, you and I gave a presentation recently about one form of digital asset, which is databases, pixels and things like that. Yes. These things are now being registered and traded as NFTs, non-fungible tokens, on the blockchain. So, mate, really interesting space. And this, I mean, it's got a long way to go, but big statement. It is fundamentally going to change how we secure our intellectual property forever. So watch this space is my guess. There's going to be a lot of turbulence while they get it right, but mate, a really interesting concept.
But yeah, I mean, you brought this up a little while ago, Andy, the too big to fails, right? And some of these businesses, let's say for America, for example, Australia has a little bit of a different too big to fail collective. But, those companies which are Facebook and Apple and Amazon and those, in America, are you saying, and I'm trying reading in the lines here, like those entities, those companies creating their own, their own currencies, their own NFTs, they're going to have some power in this sort of space. Is that kind of where we're sitting right now? That kind of idea?
Mate, it was almost like we briefed this beforehand, and so anybody who knows Jason and I knows that we share half a brain, but we don't often brief before we chat. But mate, spot on. And this brings me to his comment, because it was his comment on Bloomberg last week that really got me thinking around it. Because some of the things that they're big comments, and this is an ex-hedge fund manager. I think he's worth about 5.5 billion. So you tend to take a bit of notice of what the guy has to say, and so. It came from this article here, because he was saying that he's bought Facebook to capitalize on the company's digital wallet. Now, the digital wallet, so let's sort of just go backwards a little bit. I've just talked NFTs, so that's traded tokens, and in this concept of NFTs, non-fungible means it can't be changed into anything else. That's what fungible means. I love the word fungible. It's a fun
I was going
word.
to ask about that. That just seems like a weird word, something to do with mushrooms, but fungible?
Non-fungible. So if something is fungible, it can be made into other things. Like plasticine is fungible, right?
There you go. Well, I didn't know that. I've just added some knowledge to my grey matter, which is awesome. One of the reasons I love hanging out with you, Andy Fenton.
Mate, everything for the next few days around all of our listeners is either going to be fungible or not fungible. I'm not sure that my diary is very fungible at the moment. Love the new words. Love fungible. It's one of my favorites. It's a fun word. But so non-fungible just purely means that it can't be transposed, it can't be broken off into anything else, it can't be divided into multiple parts. So this idea, so we've gone blockchain is the founding registration system for non-fungible tokens, which it could be your IP, Jace. It could be the Mona Lisa. It could be a digital baseball card. All right, and these digital assets get registered and verified on the blockchain. So then we go to blockchain being currency-based, things like Ethereum and Bitcoin. And I'm not going to go into too much detail in regards to how that all works. If people want to know, we'll go through it another time, and we can think of a different type of acronym for it. No freaking time. I love you, Craig. That's awesome. But so this got me thinking. Billionaire investor Mike Novogratz bought stocks to capitalize on company's digital wallet launch. So just check this out. So Facebook's Novi wallet, and we heard a bit about it previously. Novi wallet aims to allow users to send and receive a DM digital currency, formerly known as Libra. It's a blockchain payment system that has faced multiple roadblocks in the past. It was meant to launch early in 2021. Regulatory concerns around Facebook's privacy have stopped this. So the rumors are that this is going to come later in the year. Now, the reason why I think this is so critical to watch, I'm not saying that it's going to come true, but I'm saying that we really should be watching this as investors, property investors, business people who are investing in their own businesses. I think this is a movement that needs to be watched. And I've always said it may not be Bitcoin or Ethereum, but the technology that underpins it is literally going to change the world. And the reason why I think this is extraordinary to watch is what's the current user database of Facebook at the moment? Active users. Do you know what the number is? I know what it used to be.
It'd be hundreds of millions, if not a billion, wouldn't it? It'd be massive.
I'll see if I can actually find it.
Try and track it down. Well, no,
it's in the billions. So it last time I saw it, it was about 2.5 billion. Here we go, 2.8 billion. And let's verify the statistic. Okay, I can't verify the statistic, but 2.8 billion from an unverified source. That is your distribution network. So imagine
even if it was a billion, even if it was a billion, Craig's got 2.8 billion in there, but even if it was a billion, that's still a lot of distribution, Andy.
Well, we've just verified it by a lazy blockchain, right? So we've had one other data source actually confirm that it's right, so it must be true. But that said, that is their exposure. They do not have to pay to market to that 2.8 billion users, and they're giving you the ability to have an asset that is not fungible but can be exchanged, right, for other services, goods, advertising, perhaps. Which is completely non-centralized, right? Is decentralized. It's got nothing to do with reserve banks. It's got nothing to do with other companies.
Speak in layman's terms there, Andy. Like, I mean, like you're saying now, like in other than decentralized, basically it's not controlled by the government, right? And I think this what terrifies, a lot of governments. And, when you and I sit and have a few extra wines after Wealth, Wine and Wisdom, and we pontificate, we get to points where we're like, holy crikey, like this, if this thing goes in this direction, shit, everything's going to be new. It's going to be so unbelievably different, But, talking today about that, it's becoming so apparent that we're heading in this direction, for every industry, and understanding it, the sooner the better, yeah?
Absolutely. And so it may not be digital currency per se that you look at. It may just be the technology, but this is definitely an eyes on. This is definitely an eyes on. And look, anybody who wants to read articles, he's quite provocative in his commentary. So he doesn't mince words, but definitely worth a listen. Because this is going to be a very, very, very interesting race, because if Facebook launch it well, imagine how explosive that is going to, or the rate of change that's going to come from it, because you will have people launching into this. You will have trading apps launching into it so that they can trade stock via digital wallets. They'll have Facebook ads. They will have Facebook Marketplace. Like, it is the epicenter of being able to start off something like this. And you reckon that Facebook created a revolution once? It may well be that they're set to do it again. It's just really interesting. Like, it's a big Hail Mary at the moment because there's so much that needs to fall right, but it's an interesting one to watch.
Mate, I think you and I talked about this this unofficial, call or prediction that you and I every now and then put ourselves out there and go, right, what does it look like? Well, I 100% believe that we have got one of these big giants. And if you stop sharing for a second, I'm going to just quickly share something now, which is something in this space also. I think I've got, there we go. And whack me up in the corner there. I'll go over the other side. But, if we have a look at what this might look like, and you and I saw this just recently, have a look at the size, the top 5. Have a look at the top 5 businesses, and I'm going to include Tesla, so let's just get rid of that. But have a look at the top 5. Have a look at them. And you call it the too big to fails, right? Apple, Microsoft, Amazon, Google, Facebook, and Tesla, right? That's the top 5 American businesses that have reinvented themselves in the last, generation or whatever it might be. But they are platform, internet-led, like those businesses. So, for example, what you're saying when it comes to, all right, Facebook's going to have a crack at, these things, which whatever it is, if it's digital currency, a digital bank, NFTs, blockchain, it makes so much sense. It's so obvious that one or all of these 6 are going to nail it, right? Because when you have a look at Australia, have a look at how, in reality, our top 6 are so kind of 100 years ago. In reality, when it comes to where we might be, we've got this little cheeky one right here, which is Atlassian, which is quite an interesting company, an Australian tech company. But BHP, National Bank, Combank, CSL, Westpac, and banking, farming, mining, and banking. That's it. That's Australia. And when you look at America, you look at other places in the world when we're talking about these things, I think I just I get tingles, Andy, and for those still listening in, take notice of this stuff, because, if we retrofit this, Andy, into potentially, some investment ideas for us into the future, what does that look like for us? We got to have a piece of this stuff in our portfolios. Let's face it. We think Facebook is worth something now. It's arguably one or all six of those behemoths in America will become banks, will become they'll control money instead of banks. Yeah. What do you think?
Well, exchange, they'll control exchange.
Right. Yeah, they'll be the middleman, right?
So whether it's currency, whether it is, what's mine is yours for a fee, which is that gig economy, where you can literally trade, yourself or your services, or a non-fungible token, which might be, a credit of some
fungible. I need a little bell every time you say fungible.
Mate, like us, and this is going to go, and I know something that you're going to bring up. I just know that you bring it up because I've had a few people message me throughout last week about it, and so I know it's on your talk book and your talk track tonight. So we'll chat about this further when you get to chat about some of your topics, because mate, I fundamentally believe, yes, that people should be getting into some of these asset classes, even in small, tiny ways.
Yes.
It's just the mechanisms of how we can actually do that, and how we can do that lawfully, legally, and responsibly, which is a big question, and it's a hard one to tick off on at the moment, because it's a bit of a self-directed journey based on some of the legislation.
A little bit Wild West, Andy. I mean, Shivers, Tesla went and bought how many billions of dollars or hundreds of millions of Bitcoin did they take a piece of? And there's some big players playing in this thing now, and if it's grandstanding, if it's for real, if it's whatever, the light is firmly shining on this space, and for many of us, it's still Wild West, is what you're saying. It's still Wild West. There's still a long way to go, but for a small amount of risk capital, for a small amount of risk capital, you wouldn't want to miss the boat. You want a piece of the action. So, but anyway, that's not investment advice. That's just pontification with wine and green juice that we're drinking tonight.
Well, mate, I've got, and I can't bring it up right now, but something really interesting happened, because Elon Musk basically said that he thought that I can't remember exactly what he did, but he tweeted that he thought that Bitcoin was a little bit overvalued, and the share price of Tesla literally within a day and a half, it might have been, no, it was a day. Literally in a day, it dropped 21.6% on the back of him. That's the kind of effect that he has, right? But his share price dropped by 21.6% because he said in a tweet that he thinks that maybe Bitcoin was a little bit overpriced at that point in time. And one of the reasons is that's one of the biggest assets on their balance sheet.
Yeah.
Right. And there's a whole lot of funky stuff which we can't get into, but there's a whole lot of reasons why you can hold stuff like that on your balance sheet, and why it's good to hold on your balance sheet. Potentially, you got to know what you're doing, but there are some funky reasons why. Yeah.
Well, I mean, one of those things, Andy. I think you and I chatted about it a few times ago with Tesla. I'm a big fan of Tesla and Apple. They're two of my favorite companies for a couple of reasons, but Tesla entered that domain now, where it entered the was it S&P 100 or the one of those
S&P 500, and we actually called that when it happened, and it shot up.
We did
20%, I think, straight afterwards, maybe even 30% straight afterwards.
Yeah.
I think, but so we did it on the Thursday before it, on the Friday before it actually happened. So it happened in the Saturday morning after Wine and Wisdom. So we woke up with a headache and a 25% increase in the Tesla share price.
And the share prices. Well, listen, I'm not quite sure who chucked this one in, but But I don't think you're way off the mark with Australian steel, gang. One of the things, I haven't got it in my talk track tonight, but just quickly thought I'd talk to it. BlueScope, you and I talked about this, Andy. I just got notice from 4 of our builders at Positive that they're all going to steel frames. Listen, I think it'd be worth a little cheeky punt on BlueScope or whoever provides those frames. It is BlueScope steel. That I can see the next 2 to 5 years that framing being quite significant, because unfortunately, 70% of the Australian pine industry burnt down or was bushfire affected, and then the rest of the world's provision has been absorbed by America in short term. So, yeah, I think you'd be all right there, whoever that was. Unfortunately, your username's not come through, so give us a shout out who you are, where you're from. But there you go. All our builders too. So one of the crew just giving that shout out there about builders.
It's not been a bad little journey for it over the course of the year, and it has been spiking over the last month or so. Not exactly in line with markets, but yeah, look, could be. And again, this isn't advice by any stretch, but it's just interesting because it could actually be a major trend. As so long as because we can't get the lumber in, and if we keep building, then there will be a pocket, right? Because there's also a shortage of real estate, and that means that they do need to build more. But it could. I reckon it's definitely one to watch there, mate, because we're hearing more and more about the construction side on BlueScope Steel, and those guys are already set up for it. And there's a big inertia. And so one of the great things in business, if you're on the right side of it, is barriers to entry. And so they've been doing that for a long time. They don't have a monopoly on it, but they're very well established. So for somebody to break into that market is going to take a lot of cash and also time to be able to do it. So they've certainly got a good run should that be the way things go.
It's an interesting one. Well, we've got Lauren. Thanks, Lauren. Shout out from ACT. Unfortunately, depending on it's us or whatever it might be, we can't see your username. So good to see you in. And somebody's driving. And yes, don't text and drive. It's dangerous. But thanks for dialing in while you're driving, whoever that is. That's great. That's funny. Yeah, that's awesome. So listen, I thought I'd give a bit of a shout out for what's in the news for me. A few little interesting things over in my neck of the woods, what's in the news. And I think you and I could sort of wax lyrical about a couple of these, Andy, when it comes to what's going on in both of our necks of the woods, really, at the end of the day. Where let's have a bit of a look at what's going on here. This one I think sad, and also, maybe not necessarily sad, but I think, you and I talked about this off air for a second, but, for everyone listening in, there are 50% less registered financial advisors in Australia right now than there was at 2018. And I've been critical of the financial advisor industry for a while. I think the skill set and the experience set is sometimes lacking. But on the flip side, I believe that it is absolutely vital, as vital as your local GP type of person to be in your 6-star team when it comes to your financial wellness. And this actually makes me sad, because what I believe happens is that governments, I think lazy governments, lazy authorities actually end up doing something that makes it easy for them, but it actually ends up penalizing regular Australians in the quality and the care that they can get when it comes to their financial needs. And you and I are talking about this is a sad state of affairs for our financial planning industry. Like you said, the banks fucked it up, excuse the French, and now small individual operators are the ones paying the price, right?
Well, mate, I literally just today I paid an ASIC fee, which is one of several. So literally just before you can give any advice, your registrations are borderline in around the $10,000 mark before you're allowed to even register under a license. And the ASIC levy, so what they've done is they've said, all right, we let the banks in. The banks did an incredible job of completely destroying advice, integrated lending, like the full box and dice. Like they completely bastardized it, profiteered off it. We all saw it, Westpac at the Royal Commission.
Yep.
And so they came in, obviously didn't do the right thing. Not all of them, but there was a fair swag of them. And anyway, so they've left the industry. They've left. They've virtually got no advisory arm, no wealth management arm. They sold off their advice platforms. They sold off their advisor platforms. They sold off their investments. They sold off their insurance arms, their managed fund. They sold it all. They got rid of it. They've gone, we can't make ridiculous amounts of profit in this anymore because we've come in, we've screwed it, and now they've brought the legislation in so hard and heavy that we can't milk it. But the government continue to put in more and more penalties, more and more restrictions. And in this case, so literally a 60% increase in our registration fee with ASIC, just short of $3,000, I think it was, that we literally just paid today, so that we can self-regulate. So we can pay ASIC to regulate us to make sure that we're doing the right thing by our clients after all of the banks decided to piss off and take all of the dodginess with them. Now, I should probably say allegedly dodginess.
Allegedly.
The shame about this is that over-regulation, because as an advisor, we have to tread so very, very carefully because ASIC's looking to shoot you. Everybody is looking to line you up and shoot you from the Royal Banking Inquiry perspective, right? But where this really hurts the industry is, it's going to raise the cost of advice. Flat out, it just does, because they hit us with larger fees. It flows through to the investor. It is always the case. Governments regulate, and then everyone gives the government a big cheer. Yay, well done. Yeah, you've fixed aged care. No, you haven't fixed aged care. You fucked it even further, and the rest of Australia are now paying for the new level of incompetency that's going to go into aged care. That's me future gazing on what's happening in aged care. But that's effectively what's happened here. But and this going back to the Ethereum, blockchain and investing side of the equation, makes it really, really difficult for advice to be given on what could be the new way that the world is going to operate, because it's so heavily legislated from a perspective of what they believe is right. And things that they don't know about, then if they don't know about it, clearly nobody can know about it. So being able to give advice in that area is really extraordinarily difficult. And I think that is the shame that is going to come from all of this. Not only is there less, it's going to be more expensive. And those who want to be able to advise in the areas like we're talking about really have to put in a huge amount of work in order to just be able to be licensed. And that often means that they've got a self-license so that they can give advice in these areas of crypto and so on and so forth. So it is a shame, mate. And ultimately, the people that it hurts the most is your Joe everybody out there. They should be decreasing the cost of advice, not increasing it.
Mate, I completely agree. And one thing that, I was chatting with some friends today, and I was sort of saying, hey, listen, I believe there should be some redistribution methods at extreme wealth. Like I'm actually kind of a bit of a capitalist / socialist when it comes to, if you make it
coming out.
Well, if you make $1 billion, you get a plaque, right? Anything beyond $1 million needs to be redistributed in some way. And there's a bit of tongue in cheek in there, but also I think a bit of philosophy in there as well. But, what I believe, this type of very short-sightedness from the government and commissions and industry bodies that try to sort of pander to this stuff, really at the end of the day, what it does, and we actually see it in America and other places before we see it in Australia, all this does is make the rich fucking richer and the poor become poorer, because the Joe everybody cannot afford, you as an advisor, Andy Fenton, cannot afford to help Joe everyone create some financial freedom. It's actually impossible. It's financially impossible for you as the provider to actually provide a service to help that person. And I think that's a shame. I think that's embarrassing. And I think that is the thing that's overlooked with this type of legislation. I think it's disgusting in our system. It really fires me up because, Australia and many places is like, let's have a go. Everyone can have a go. It's a fair go for everyone. No, it's fucking not. It's not a fair go at all when it comes to this stuff, because the regular person can't get access to, Andy, good advice or good finance or good, investment opportunities or whatever, because of this type of short-term brain dead thinking. But anyway, there's my little soapbox moment on this one. I know, it's been an interesting journey to sort of get here. Let's hopefully that a little bit of sense comes through into the future for our industries, our combined industries. It's often 1 or 2%, idiots in our industries, ruin it for others, and that's a sad thing, unfortunately. So as we go, but listen, here's one thing that I think you and I we were calling this the other day. It's here. It's showing up right now. The abundance of dollars is causing a headache for banks and investors, and it soon could get worse. You were talking about this not so long ago. Money right now for over a year has been slowly but surely having limited choices for defensive places to live and sit. Defensive assets in the terms of, Andy and financial planning and others. And now cash is worthless. It's where it sits idle becomes actually a negative rather than a positive. And banks and many investors are now going, well, shiver me timbers. How do we get this money? Where are we going to put this cash? Because there's a lot out there, Andy. What are your thoughts? What are you seeing? Because I'm seeing huge amounts. The Panadol issue. What's going on here?
Well, mate, when you stimulate as much as what they've done, and when they're like, we're in a unique position, obviously, in Australia, where to a degree, it's almost like nothing's happened in comparatively to the rest of the world, right?
Yeah.
And I don't mean to minimize anybody's pain that the COVID will have caused, but when we look offshore, we understand that things are far worse. But we've got a huge amount of money that's been printed, like the biggest stimulus that we've ever seen, bar none. We've done a lot in previous episodes about it. Yeah. And you can't leave it in the bank. You literally can't leave it in the bank, because if you leave it in the bank, it's literally devaluing. And so the biggest challenge is then, well, it's got to find a home. It's going to flow like water to the lowest point. And the lowest point is the investment. And so people are literally, and explains a lot of the volatility in, Bitcoin. It shows a lot of volatility in financial markets, the positive volatility in property, not just here, but over in the US. I don't know too much about Europe at the moment, but US property has really come along in leaps and bounds. So it needs to be mobilized, or it needs to be bought back. And these things have been on lend for 10-year cycles, right? So that liquidity is being pumped into the system. So it has to find a home. And ultimately, unless we see deflation, which I don't think that we're going to see, where asset prices devalue en masse, milk gets cheaper, property gets cheaper, electricity gets cheaper, oil gets cheaper, all of those sorts of things. So the average basket of goods that we buy gets less. Mate, I reckon we'll see this redeployed into investments. And the reason why it's giving everyone headaches is because everyone keeps on saying it's over. That's right. Everybody's been hearing it. It's overvalued. Everything's overvalued, Jace. Everywhere I look, everything's overvalued. But what I know is that, yes, it might be overvalued by previous metrics, but sometimes metrics change and stimulus in markets change. And the fundamental portfolio theory that advisors have been almost statutorily restricted to use, right, was built by a guy, Harry Markowitz, which was the founding building blocks of modern portfolio theorem through a mathematical equation of probability and diversification. Now,
diversification. When was that? Like 1930s or something?
Mate, I can't even remember. It was about 20 years ago where I was saying that it was a dated philosophy that needed to be updated.
Yes.
And I've ever since I joined the industry, I remember when I did my master's, and we had to do this matrix algebra statistics stuff into the third dimension, and literally, as we were doing this efficient market theorem and doing the model portfolio theorem and putting it all together on real stocks and everything was broken at that point in time. And you're looking at it and you're going, well, actually, the diversification makes no freaking difference whatsoever at this point in time. It was all bad. So the assignment actually proved that the thing didn't work, which is not what they are aiming for. But this idea of modern portfolio theory or diversification says that you have to have assets sat in cash, right? Yes. So what people will probably, and what they are doing, is they're going into riskier assets, because cash is trash. It's not earning anything. And if you park your money there, it's going backwards. So people are either utilizing it, or they're going to take on more risk, which means you get more potentially uninformed money in the market. And what that leads to is more informed money in the market waiting to take up on opportunities when uninformed money in the market shits the bed because of a large volatility event. And I think that, we could have significant volatility events, and volatility, I mean markets, crashing by 20%. And then a month later being up 10% from the previous highs. And these are the types of things that can happen by having too much cash.
Yes.
And also, the challenges of having people, managing money in what is fundamentally almost a mandated, statutorily mandated type of investment philosophy that ultimately is not going to serve you, especially if this growth cycle keeps changing. So if you change the stimulus, you inject more money, then all of a sudden the parameters change. And yes, it might be 20 years, they might normalize, but we might be non-normal for the next 20 years, which would mean, when it gets back to normal, it would be abnormal because it wouldn't be normal anymore, if that makes sense.
Mate, I'm going to cut that last 2.5 minutes out. I think that was gold, but there was so much value in that moment. Like, I'm going to break it down in my terms to sort of see if I heard what you were saying. At the end of the day, there's more money than people know what to do with. And let's call it stupid money, right? Dumb money. Let's call it dumb money. Dumb money will enter the market. And the smart money, the smart people will see that dumb money like a fucking great white shark sees a sleepy seal, and it will be consumed like there's no tomorrow. And dumb money will do dumb deals. That's like that's what I've experienced in the past in these moments in time. When dumb money, like the money has to get out of these positions because it's devaluing, and it'll enter places where it thinks there's no risk, and because of these short-term adjustments in marketplaces, everyone thinks, oh, there's no risk in that. But then that dumb money will take that position, and the market will beat it up. Basically, really, at the end of the day, that's my kind of interpretation in that sort of space. Yeah, dumb and dumb, dead right.
2 weeks ago, this man here was in our Wine and Wisdom, and we were commenting on it, and but Bill Gross is probably the most successful bond trader or bond investor the world's ever seen, right? And as a part-time gig, he was playing the market, betting, and his quote was, he's enjoyed summer going head to head with traders playing chicken on GameStop and other types of stocks like this. So what I mean is that if you're the dumb money that's going in and just feeling around and trying to figure out your way through it, these are the guys who are playing chicken with you. They're going, how long are they going to last? And he's got a few billion in his pocket, and you've got a few thousand in your pocket.
And he's probably betting both ways, Andy. He's probably that smart. He's betting three ways. Whether he wins, loses, or draws, he'll make money anyway. Right,
but pretty much he'll bet on terms, right? Yeah. So he'll have a position for a week position, a month position, 6-month position, a longer term position, and they're all going to be covering each other. And he's just waiting for people to make stupid decisions with their cash. And there's so much of it about now that these guys are going to have a field day. And realistically, now I really need to chat with Dumb and Dumber. Is that us?
No, the Dumb and the Dumber money. Like it's just like the idea, and I like that's the way I see. G'day, Aaron. Good to see you, mate. Good to see you dialing in. But yeah, listen, I saw it in the property game. Just prior to the GFC, there was more money than people knew what to do with. We'd had a property run like we'd never seen before. Like from 2003 to 2008, the property market had a steep gain like we'd never seen before. And everyone was like, this will never end. Everyone was like drunk from, the champagne and caviar that they were all eating. And, dumb money, entered dumber deals. And because deal flow in that world is important, and, just stupid deals and high risk deals got done because there was no deals around. And that's part of what I heard you say before, Andy. In this world, when the money starts looking for opportunity, deals, people who put deals together, I know you've spoken about this before in your previous life as a reformed banker, bankers who are very clever people putting deals together that look great on the surface, but not necessarily great underneath, consume that dumb money, and there's nothing people can do about it. It looks great, but then it's gone. So, that's my call. That's probably my point about that bit in the news is for those listening in, don't be the dumb or the dumber money out there, in that marketplace. Don't get caught up in, short-term crazy ideas that you know nothing about for the promise of, I don't know, fool's gold, let's say. Long-term, we always decide as investors long-term to take a piece of action for 10, 12, 15, 20 years. If we are doing some small speculation, just know that if you blow your dough, it shouldn't bring down the farm. That's probably a part of what I was sort of sharing for my bit in the news. But a few other things going on in my neck of the woods, Andy, and the world of real estate sort of keeps on turning and churning. Western Australia's got a little bit of pressure on its marketplace right now. The supply chain in Western Australia had been pretty average for quite a while. So, people camping out, trying to get rentals. Here's one thing that's going to end. And we had a question before. From Craig. What shifts do you think or noticing since the JobKeeper got pulled? One thing that's actually happening in the property world, gang, is that moratorium on increasing your rents and the moratorium on you can't kick someone out and all of those sorts of things when it comes to properties and your rentals is actually coming to an end. And it depends on where it all got engaged. But those moratoriums are systematically going to come to an end over the next 3 to 4 months in Australia across every state. So what you will see is now the property investors, the landlords going, oh, hang on, I dropped the rent a bit. I did my bit for 12, 18 months. Gang, the bank's not giving me any holidays on my mortgage anymore. We need to get back to commercial terms. And you will see, probably a little bit sadly, you'll see a little bit of this rhetoric going around because, like Andy, you said, the cost of everything doesn't end up with the institutions because it all gets passed down to the end user. And unfortunately, it gets passed down to the person who, let's quite technically, can afford it the least. We've got to be aware of that one. So, gang, here's a little thing to keep an eye on. The rental crisis is out there, and I think it's only going to, have probably a two-sided effect here. As a property investor, I like the idea of my rents going up. That's part of what I'm here for, to increase my income. But for some people, that's going to bite, and I think that's part of the JobKeeper ending and a few things. But if we think, bigger picture, gang, let's talk a little bit when it comes to the philosophy of nature. You know, if something is kept alive by, you know, artificial means, it doesn't find its natural place. And nowhere in nature, you know, does, you know, artificial support ever occur. You either survive or you don't survive. And when something dies and moves on, nature creates something that replaces it. You know, it gets regenerated, it gets redistributed into the ecosystem, and, you know, reset as nutrients for something else. So too, I believe companies, you know, companies that were sustained by JobKeeper should never have been sustained. And we didn't want it to land at one point. I think it was the right choice personally. But now those ones that fizzle out now, I think that's normal and completely natural. And those things will be redeployed into better things, Andy, is kind of what I'm trying to say, Craig, who asked the question. It's because what happened,
between now and previous times is that now we're going to have a lot that hits in a very short period of time, whereas previously, if it happens naturally, it tends to drip feed. You know, it's the game of who can hold on for the longest, which is a terrible game, and it's not a nice place to be in business. And it's just not a nice place to be in business. But that's the reality, is that one will go, then the next will go, and it happens over a time. Now it's highly likely that you're just going to see it go bang, and there will be a lot of the zombie businesses that just go bang, and that will have effects. And we should probably explore some of those, because they're quite easy to predict, a number of them.
Yeah. Well, I think we could sort of maybe circle around next week or the week after on some of that stuff, Andy. That'd be quite good. You know, it's like ripping the Band-Aid off, gang. It's got to happen. I don't think anyone needs to be scared or worried about it. Personally, I think there is plenty of money right now in the marketplace that will, when there's a gap, and a valuable gap, things will flow to it. Okay, that's what I do know. Nature abhors a vacuum. You know, when something crumbles, often if there is genuine value or opportunity in the ruins of that thing, other things will rush in there and rebuild it from scratch. So, you know, I was sort of saying the other day, even though I'm a property guy, I love the property world, I actually think the government made actually a very easy but poor choice to stimulate the property economy in Australia rather than the business economy. I think they should have done a lot more for investment in businesses to create jobs in Australia, you know, small businesses, new ideas. But anyway, that's something we could probably talk about at another time, even though I've benefited significantly. From the property world. I actually think it's very short-sighted, to be honest. But, you know, it's working for the moment. Let's hope Australians can redistribute some of that cash and money into opportunities and job creation over this next 3 to 5 years is what we definitely sorely need, Andy. So, but last but not least for me, you know, what's in the news or something you should know, that the property market, especially in some of the major locations, which is the Melbourne and Sydney locations, and probably from a national point of view, Andy, you talk about this all the time, is that we have reached our previous highs in Melbourne and Sydney. Those places have reached previous highs that were back in sort of 2017. Now we have reached our previous high when it comes to the property market index and those values and prices, which is quite interesting. So for me, a lot of people talked about the property market. Oh, is it a bubble? Well, gang, the market shit itself in mid 2017. It had a downward trajectory all the way to the beginning of 2020 with APRA, finance issues, and the election that was threatening to get rid of negative gearing, which wouldn't have been a problem, let's face it. But, you know, some people freak out about that stuff. But Andy, we're back at parity for values or not parity, but at recent previous highs for certainly the big market movers, which are Melbourne and Sydney. And people go, "Oh, is there a bubble?" And no, there's not. There's not a bubble. It's just to stop thinking in that term. Like it's a stupid idea. The market will pay the money. The majority of buyers are actually owner-occupiers, gang. And so, what I find, Andy, and what I've experienced in the past is when owner-occupiers buy properties, they tend to stay. When it's investor-driven rises, which at this point it is not, market gains can be eroded because investors often, uninformed investors, tend to be good time Charlies. They're like, I'm only in it to win it. And if I don't win in 12 months, then I'll get out and I'll lick my wounds and I'll lose money, which is it's stupid. Like it really annoys me that investors who invest in property and then leave after a couple of years going, oh, property doesn't work. Well, no, it doesn't work like that. But anyway, I don't want to do another soapbox moment, but there we are. In that sort of space. So
poor little Perth, just way back there. And geez, mate, it wouldn't take too much of a bit of the mining resources sector to come back online for that to have a fairly significant difference, would it?
Mate, it got a poleaxing for quite a while, and it was one of those places that when big companies leave town, it can affect quite significant populations, and so it was an interesting lesson, that one, and certainly for many people, who were sort of right into that mining town philosophy for a decade. It was one that sort of bit them on the bum, unfortunately. So, wasn't great. But Perth, certainly right now, is on the turn, Andy, and some of our clients have just got into Perth only sort of 3-6 months ago. They're loving it. Their rents are high, and they've even got value increases in the short term. So sometimes it is about timing the markets, but let's face it. Both you and I know time in the market is the real wealth creator. It's not timing the market, whether it's the share market, whether it's the property market, or the both. The more we can stay in the market, more we can stay in the game, the better off we're going to be over a longer period if we don't do anything silly.
Well, mate, just to bookend yours, left-hand side, ASX, right-hand side, which is Australian share market. And this is just over the last 5 years. Whoops. So that big dip that you can see there, that's 1 year ago now. That's 1 year. It's a matter of fact, it's as probably something they should know is the super funds out there plugging their 1 year performance most likely at the moment because
yes,
March has just gone off the 12 months return. So just be aware of that, investors out there. But the point that I'll make on this one is Australian market basically back to where it was before it fell. Not quite there, but just almost. US market, leaps and bounds in front of where it was in COVID. COVID looked like...
Doesn't that shine on that, Andy, where we go, all right, Apple, Microsoft, Amazon, Google, Facebook, Tesla. I think you've said it once or twice before, the American market, like the percentage of those performing in this recent times would have just killed it, yeah?
Absolutely. And look, going back to what you said initially about the Australians, the banks, the mining resources companies, most of those companies are 100 years old or more.
Yes.
And the top 10 or the top 7 in America, most of them haven't even hit most of them aren't even teenagers. And those that are teenagers can't drink yet. They make up the majority of the top 5 stocks by size in the US. And
that's crazy,
like you said, more focus on small business. And here is also, one of my fundamental beliefs on it is that when you protect an ecosystem, you take away its ability to morph and defend. And ultimately, innovation, more often than not, comes from necessity.
Yeah.
Sometimes it comes from people just wanting to innovate and improve, but often it's there because people have to. And what we'll probably see now in Australia, should the government allow it, and should the government embrace small business and innovation and not try and control it for its own advantage, but kind of go, let's incentivize free market, let's incentivize great ideas, not what we think is a good idea, but just what is potentially good business, then we will see innovation that will start. Mark my words, I reckon we'll look back in 10 years' time and some of the biggest companies of Australia in 10 to 15 years' time will actually come from this period of time over the last 12 months past to 12 months in the future. And that is what I'm looking for, is because if you don't allow us to be reborn and find better ways of doing things, then we'll leave it to the rest of the world like America, and their stocks will rise.
Yeah, no, mate, dead right. And I think that's a great way to sort of segue and wind up this wealth and wisdom, because, I think dead right. What now, if anyone's listening in and you've got some entrepreneurial ideas, on the flip side of, hey, listen, dumb money and dumber money, well, maybe take advantage of that. Maybe you've got a great idea that's the next, I don't know, the next, Tesla or the next Facebook or the next Google. And money's looking for a home. Money's looking for a place to go to work right now. There is more money looking for a home to go to work than Andy and I have seen in our 20 plus years in this space. And I think I'm making a very uneducated, uninformed comment here, but probably at any time in world history. I'm going to chuck a big comment out there. I think there's more money, there's more money than we've ever seen in the world's history, and most of it needs a place to go to work, gang. And if you've got good ideas, holy moly, it's time to get them out and up and raise some funds and build some businesses and do some good, crazy, cool stuff. That's what I think anyway. So there you go. Anyway, yeah. Hi, honey, I'm home. I think that might be my wife saying, hi, money, I'm home, or hi, honey, I'm home. Hi, money, I'm home. I don't know what's going on there, but that sounds good to me. Fantastic. Anyway, gang, well, I think we might call that done and dusted, a wealth, wine, and wisdom for a Wednesday. Done. Andy, hopefully your green juice was lovely. My wine. I had a nice wine today, Andy. Check this one out. Yeah, holding his nose. It was Barossa number 1, a 2013 Shiraz given to me by someone. Yeah, very nice. Saltram anyway, for those listening.
Yeah, beautiful winery down there. Well, I think it's one of Australia's oldest wineries, if I believe.
There you go.
Be on the front of a label there somewhere.
Well, mate, you know your wine well, Andy. That's another reason I love hanging out with you. You make me look a lot more sophisticated than I am. And I'll take that. 1862, the first number 1 vintage. Yeah, there you go. Hey, well, anyway, that's kind of cool. It was a lovely wine, and mate, I enjoyed that conversation and a glass of wine with you, brother.
100%. Well, another 4 weeks of this, and then it's not great stuff. Fasting and getting the brain and gut back into shape. It's good for you, but at the time it feels a little bit painful, I can tell you that. But, mate, it's good seeing you enjoy yourself over there, and, mate, it's always a pleasure.
All good. All right, mate, let's call that one done and dusted. Thanks, gang. Great to have you guys on board. And as always, appreciate you supporting us, supporting you. If you continue, we'll continue. We love it. So, thanks for hanging out. All right, gang.
Before we duck off, it's tax time coming soon, so we will have guests. So remember, tax time. Start thinking about it now, and we'll start bringing some really cool stuff over the coming weeks.
Yes, maybe we make that a bit of a special in the next coming weeks or two. All right, tax time it is. Yep. All right, mate. Great to hang out. Thanks, gang. Thanks, everyone. Adios. Bye for now.